Hey guys, how are you guys doing today? Thank you so much for being here. Happy Wednesday. Happy Wednesday. Jackson, come here. Come here and check in with us, Jackson. Well, hey there, buddy. Well, it's so nice to see you. It's so nice to see you, Jackson. I appreciate you checking in once in a while. You're such a good little co-host, Jackson. Yes, sir, you are. Yes, sir, you're a good little co-host. Thank you for checking in. Okay. Now he's going to walk around the house. We will share this old screen. Share that window. Oh, shoot. Look at that. Gold. And what happened to gold? Just did a freaking massive sell-off. It was up 1% just a second ago, and I checked it, and now it's flat. I mean, there's a big rejection tail there. Anyway, it's contending with yesterday's low, or yesterday's close, I guess, since it's flat. Yesterday's settle. All right, but let's look at SPY. At least it's gold and silver are kind of bouncing. All right. All right, so here we have a 30-minute chart of the old SPY. Let's see, we opened. All right, that was the first bar. That's 8:30, 9, 9:30, and 10 o'clock bar. This is straight barcode. The past, I mean, we're building out a pocket 687.71. Trying to anyway. Trying to build out a. May just be trying to build out this, mainly build out this POC. This is the mean on the chart. Maybe we'll be there by the end of the day, 680. All right, well, let's look at Qs. Now, I drew this green line yesterday to where I thought the NASDAQ might go and bounce yesterday. It bounced a little bit into the close, not very much. And then this morning, I drew this line. This line's just the low for the year. Right now, the NASDAQ is on the low for the year because that was the low set January 20th, which is the lowest price, for the year. Just FYI, we're back at the same level we were at on the NASDAQ on Christmas, before Christmas, the week before Christmas. All right, so that's NASDAQ. Let's look at Bitcoin. Yep, another day, another sell-off. I'm wondering if there's going to be buyers here, like we were always thinking. I mean, it looks like they're getting progressively weaker. My gosh, I hope we don't sell off through this area. Oh my gosh, you got to be kidding me. This is a route in crypto. This is a route. All right, well. All right, so let's look at silver. We haven't checked out silver yet. Silver's actually up 2.2%. Silver pulled back, did a perfect pullback at 61.8. Why didn't I buy that? Somebody make me buy that 61.8 pullback next time. Man, now that's an example of Fibonacci numbers working. Although, like I always say, the place where you started first, there's a lot of judgment in it. So, I mean, so it's hard to quantify, really, I think, the edge that Fibonacci's give you. But a lot of people use them. 61.8 is an important pullback level. And sure enough, it turned around here. All right, well, let's look at the Divas. All right, so the Divas. We had a bunch of dividends paid today. And they're reflected in it's reflected in the total. Also, SPY and the Qs had a fourth quarter dividend that I kind of missed. They paid them, or they went X last December. So I went backwards last December. It was 79 cents in the SPY, or $1.22 in the SPY, and like 79 cents, 78 cents in the Qs. Anyway, I went back and added those. But so these running balances now account for that. But even with that, the Qs are still underwater since October 31st. So November, December, January, and the first week of February. Still underwater, even including that dividend. Now they get another dividend every quarter, but of course Qs and SPY are not dividend stocks. in any event, you could see the morons turned up. I mean, GPTY, KU, well, KU's not. I'm calling Alti and WPay the kind of just lost boys down here. I mean, you know, and then we have Alti and LFGY. Anyway, they turned up because the market's rallying a little bit lately. Even QLDY turned up. All right. So let's go to the daily percent change. Looks like a pretty quiet day altogether. Well, I'm trying to zoom in. Anyway, it looks like only one of them's down right now. It looks like only the Qs are down. That's pretty good, though. All right, so let's go back to the charts and let's check these guys. Let's start with blocks. Since I'm on the blocks hat, down 6.8. Great job, blocks. Gosh, damn. I need another hat. Jackson, where's my other hat? I need an Oklahoma hat or a Texas hat or some kind of hat. I can't keep wearing this hat. It's shaming me, Jackson. Jackson's looking at me like, what in the heck are you talking about? Anyway, I don't know where it is. Gosh, darn it, blocks. But of course, I mean, let's see if there's a reason for that or not. Bitcoin's down 2.25, so yeah, unfortunately, that's probably about right. Well, here comes Jackson. He just finished his food. I think he'll probably bring me his bowl here in a second. Yeah, IBIT's down 3.44. So yeah, blocks. I mean, unfortunately, that's the way it's going to be. And old BIT, BITK is going to be taking it on the chin, most likely. Yeah, 3.62, catching all the downside of the market. All right, well, let's concentrate some other. What about WPay? WPay down 3.27. What about old QLDY? Down 2.2. Now, also, though, these paid, I mean, it's not really down. This paid a dividend today. It paid an 18-cent dividend. I'm going to round it up. And it dropped 10 cents on the open, and it's down 12 cents now. Oh, no, it's down here. Well, these are 30-minute bars. Oh, my gosh, it's dropping like a rock. All right. Okay, holy. Let's put it on daily bars. All right, yeah, it's down on the daily bars, even including the 18-cent dividend, because it dropped from even including the 18-cent dividend. All right, but it's holding up better than a lot of the other divas, right? Hey, Mayor, thanks for being here. Hey, thanks for sending me that thing on KSpy last night. You didn't happen to watch that? You didn't happen to watch my live stream last night? I mean, I figured you didn't watch it live because you weren't there, but did you see it on replay? Anyway, we talked about KSpy quite a bit and a bunch of other ones. But yeah, thanks for that email. Thanks for that email. Has a downturn begun? Yeah, I mean, that's the price action. You know, I said it yesterday morning. I said this price action just sucks, and I've been saying it last week, and that's why I've been de-risking. So yeah, but I think it's just I don't know if the downturn's necessarily begun. We'll know when it begins because it'll be down 5% or something. I mean, whenever the panic happens or whatever, we'll know about it. But yeah, I think the market's order flow, the market's momentum and order flow just seems to have stalled out. You never know though. A new catalyst could come out today. You know, Trump could do a speech and it could have some kind of effect on something, and it could, so you never know. But yeah, it's not great times right now, right, guys? Not great times. Oh, that's what I was trying to do. Put it on minimal. All right. Okay, so let's get back here. So that QLDY, so blocks, LFGY we've already looked at is dropping like a rock. I mean, of course, because 6.62. LFGY is the new blocks. LFGY is a little jealous, I think, of the attention the blocks and ULTI is getting. And as a whole, by merit moment, maybe LFGY is going to go down and try to take out this previous low. I don't know. Do we look at Alti yet? Alti even Alti's down 3.3. That's bad. That is bad. Well, Salty better freaking be up. If Salty's not up, I'm gonna be in a bad mood. Salty, you better be up at least a freaking point. You got to be kidding me. Is this related to X though? It could be. 65, 75, 85, 95, 92. The price should really be 29.90. I mean, it's showing the price at 29.55, but it's not factoring in the 37 had there. So 65, 75, 85, 95, 92. Yeah, 29.92. Yesterday's close was 29.65. I mean, if you throw the dividend in, it looks like it's up. Let's try to confirm that. Okay, so this is unadjusted for dividends, not adjusted for dividends. Yesterday's close was 30, and right now we're trading at 29.5, which is why that shows negative 1.5. You have to add the 37 cents back in. You get to 29.90 something. Yesterday's close was, oh, this is Salty, whatever. But anyway, you guys get that in. Well, what the heck, Salty? How the heck are you? There's no way Salty should be down today. And I guess they aren't if you add in the dividend, or they're. Yesterday's close was 30, and now we're down 10 cents or something. We definitely should be down because the market's down, but I mean, I don't think they're counting that. I don't think they're showing this right. There's what it really looks like. So yes, we are down on the adjusted 10, 11 cents. All right, well, but that's terrible. What the heck are you doing down 10, 11 cents, Salty? If YQQ's not up, I'm really going to be mad. All right, well, small win there. Small win there. You would figure if Alti's such a dog that the inverse of Alti it's the same type of stocks. It may not be the same exact stocks, but it's the inverse strategy. You would think that would just be getting killed at a time like now. Although, like my friend Tom has pointed out before, probably not the best hedges because they're capped on the downside. Their upside is capped on the downside. So it's not like a black swan. They do give you a little bit of, because they generate an income. I'm going to still say they can buffer you a little bit. But anyway, at the time I put these on, they were the best things out. I may have to switch to ATTR or Chaos or something. Or maybe dump Salty and put it in this one. This one's been performing well. Look, it bottomed November, and it's been rallying ever since then. That's wonderful. That's the way it's supposed to work. And sure enough, the market in November, and I'm talking SPY, October 27th, it's Bitcoin. You guys know what happened to Bitcoin, but this isn't short Bitcoin, it's short NASDAQ. But that shows you the NASDAQ has Bitcoin. It has Bitcoin exposure. But let's do this to the NASDAQ. All right, so it right here, I mean, that's really a pretty good look for this thing. This thing's been adding. I mean, that YQQ looks pretty valuable here. I mean, it's been doing pretty well it's been doing its job, but I wish I could say the same thing about old Salty. I don't know. All right, well, I'll stop worrying about it. We got other stuff to worry about. All right, so what else do we need to check out? Let's look at. I guess we looked at the divas. Let's see. I have a text. I'm gonna look at it over here so you guys can't see it. All right. It's just, I'm watching a dog. I watch a lot of dogs. I'm basically a dog sitter. My friend's bringing his dog over tomorrow. You guys never met this dog yet. Her name's Ida Mae. I'll introduce her to the station. All right. So I do have stuff I wanted to go over though, but let's just see what you guys are up to today. But I have some tabs open on stuff we could talk about. I have a new video that's coming out. I've already made the thumbnail. I've already written the Patreon. All I have to do is go record it. So there's the thumbnail for it. I just ruined it. I just freaking ruined it. Now you guys know everything. Now you guys aren't going to watch it. This is ridiculous. Come on. Anyway, all right. So that's going to be my Option Bro video of the day, and I think you guys will like this one. Yesterday's video was a mess. Today's video I think will be better. All right. So speaking of yesterday's videos, let's go see how those strategies are doing. And I'll take questions too, and you guys answer questions, and we'll do questions, whatever. Where I need to stop saying whatever so much. And anyway, I'm working on that. I'm working on that. Whatever gives the idea that I don't care or whatever, and that of course isn't true. I do care. I need to quit saying so much. Where in the heck? There it is. All right, so there you guys are. Like I said, Mayor, thanks so much for saying that. Case by. Yeah, we talked about Case by. Then, of course, Marcus was there. It was like 1 o'clock in the morning. Marcus must have been up later. It was 12:30 my time, or it was 11:30 my time, so it's probably 12:30. I had a rough night last night, and I had a bunch of stuff go wrong, and I got behind. I didn't do my live till like 11:30. All right, or 11. Oh, you did see it. Okay, great. Did you see that one that Marcus brought out called the EDGU? Once we started talking those types of funds, we went around the horn and everything. Yeah, I forgot to check KYLD this morning. Gosh darn it. Well, I'm sorry about that. I mean, on the divas, I think we did see that. Let's see. All right, on the divas, the rolling percent return. KL 13. I mean, it took a big one yesterday, but I'm showing it up today. But maybe, but it paid a dividend today also. So it's, let's see. I think it paid a dividend. A lot of things paid a dividend. I wouldn't be surprised. About half of them paid dividends today. Yeah. So K yield's not down 5.6. I mean, it paid a 16-cent dividend. It's still down though. 16 plus 1956 is, well, let's see if it's adjusted. It is adjusted. So unadjusted. Oh, here's the way to do it. I don't have to do this by hand, I think. No. Yeah, it's still okay. It says 5.64 up there. I don't think that's right. That's the pre-adjusted number. Because we can look here. It dropped from 2074 to, we call it 2075 to 1960. So that's $1.15. But it paid a 16-cent dividend. Yeah, so it's down probably 4%. All right, well, yeah, it's taking a dump. Well, let's go see why. Everything's taking a dump. I mean, or every one of these, because these are all high beta ones. So these guys were using gold and silver as hedges, and gold and silver are up a little bit today, but I think they've turned around and come down. Teradyne pulled back. Teradyne was in Matthew Tuttle's newsletter this morning. If anyone read it, he said it's one of his favorite stocks. T-bills, Intel, BW, all their stocks are getting killed. Oh, geez, it's AMD. That's it right there. That is it right there. Yeah, it's AMD. Oh, geez, Vistra Corp making a new low. Broadcom on a new low too. just because it could happen that we're just going to have a pullback. I mean, it just, so look at this. I want to show you guys something. I was looking at this morning. We never really look at this enough, and we need to. Let me close that, and let's make this like, well, let's do, no. Candles. Okay, well, I got something jacked up, obviously. Okay. What I was going to show is this. Trading views come a long way. I didn't used to like it because I mean, but it's come a long way. So check this out. I'm trying to make it full screen. But I don't know if I can. So this is seasonals. The yellow line is 2024. The green line is 2025. Where was the top of the market in 2024? Right about here. I mean, because we did pull back in April. It went sideways from here and then down. And of course, you guys remember 2025. It's setting up kind of like 2025. I mean, but the dotted line, I think, is where we're at now. No, that's February 29th. Okay, we're right here now. No, we're the blue line. So we're right there now. Can you guys see? Let me try to zoom in a little bit. Well, anyway, so just from a seasonal perspective, spring sucks. Spring sucks. They used to say sell in May and go away, but the past couple of years, that has not been a thing. Summer was, especially last year. I mean, even Alti made hella money last summer. Everything did. I mean, blocks was up 50% or so, 40% or something. I mean, at one point, or well, some of them were. I mean, I don't know, blocks. Blocks didn't come out till June, I don't think. Anyway, whatever. Then we had a pullback in August and a pullback in September, and then rallied into the end of the year. Anyway, so those are the seasonals, just for what that's worth. Past 2 years. Max, maybe add some S triple Q. It's fine. Yeah, I know it. S triple Q is not a bad idea. I know it. I'm afraid. The reason I haven't yet, I'm afraid of overtrading with those leverage ones because you have to get. It's real tactical. You need to get in and out. Maybe buy it for me, in my opinion, buy it for a couple of weeks, a month, or something, and then you want to cover because it bleeds. Because when it goes against you, it bleeds triple. I mean, it doesn't really bleed per se, but it costs you. It's negative beta times 3. But yeah, no, it can be a great hedge. Max, I would think there'd be bankruptcies coming up on crypto treasuries. Yeah, I could probably so. RJ, let's see. Yeah, Bitcoin immersion, micro strategies. What? Oh, but you were there last night, Marcus. I don't know. I couldn't believe you showed up last night. I posted it on Twitter. I'm just too lazy to go post it in Discord. I haven't even been in Discord yet this morning. And the thing is, my Discord's on a different computer, so I can't copy and paste the link between computers. I have to email it to myself, and this other computer's not an Apple, so I couldn't text it to the other computer with the text. It's a cluster. Anyway, so now I haven't even been in Discord yet this morning, but I should have. It looks like my model portfolio is down 1%. I was up 6%, or maybe even more than that, 6 or 7% at one point. 2 weeks ago, 3 weeks ago, something like, or yeah. At the end of the year, I was flat, and then in the first week of the year, I got up to plus 6 or something. Anyway, then I lost 5% in one day last Thursday, and now I've been kind of grinding. Anyway, like I said, I haven't been in Discord, but I'll try to maybe if I can post them in there. I should post them in Discord too, but usually I post them in Twitter. You guys get the message. Anyway. All right, so let's look at some other stuff. What should we look at now? What is doing well right now? Let's go to the steady ones and see how they're doing. this back. Okay. Oh, shoot. Okay, triple QI down 1.2. All right. I mean, the Qs are down 1.4. That's it. Let's look at old TDAC. TDAC is down 3/4. That's good. That's really good, TDAC. Have you guys heard of Sticks? All the cool kids are trading this stock called Sticks now, STYX. Actually, the ticker is TSYX. Freaking Chad was giving me a hard time last night for forgetting the inside joke because he kept talking about Sticks and I forgot what it was. But it is, of course, TSYX, an anagram for Sticks, the great band from the late 70s out of Chicago. Boy, they were a good band. They were a good band. Them and REO Speedwagon were good. Only around for a couple of years, but they were good. They were good. Rocking the Paradise. I mean, man. All right. Anyway, all the cool kids are trading this one, but it's leveraged. So let's see how it's doing today. And it's fine. It's only down 61 bips. And that's, the fund itself isn't leveraged, but it is, or I know the fund itself is leveraged. I was going to say it's selling leverage options or something, but no, it's the fund itself is leveraged either 30 or 50. Now let's go check out the other leveraged ones. So that's called the Lifted series, T-Spine Lifted. So now the other leveraged blue chippy type ETFs, high yield ETFs, medium yield ETFs would be I'm drawing a blank on the ticker for the NEOS. What do they even call it? The NEO. Let me see if I can get it this way. Boosted. There it is. XSPI. Okay, so we have XSPI. Okay, well let's see how that one's doing because that's based on. Oh, it's based on S&P 500. Okay, and then we have another one. Then we have boosted. Is there only one? No, there's two boosted. Well, there's boosted Bitcoin, which is XBCI. And then there's boosted SPY. Is there not boosted Qs yet? Yeah, XQQI. Okay, let's see how the boosted Qs are doing because we've already looked at the lifted Qs. Lifted Qs are only down 61 basis points. The freaking boosted Qs suck. Man, this fund. So who has this thing? Sell, 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 sell. What the heck? I told you guys. Stick with Tap Alpha. Stay away from NEOS. They suck. How many times have I told you NEOS suck? I say that all the time, don't I? Now look at this. It's hard being right all the time. No, of course NEOS doesn't suck. It's the first day this product's been out. Let's check out XSPI. Not that that's an excuse. I will say this. They don't look real good today compared to Tap Alpha, but it's a one-day data set. We'll give them a pass. Because it's their first day of business. All right. But yeah, I'm worried about those Bitcoin mining companies. That's going to crater every freaking one of everything I have in the model portfolio. Let's look at that. I was going to show you, and this isn't totally up to date. I did this last week before I got ISSB. And these are also based on, I also did these based on, like Mimi and Mago, I just got 1.5 of each. I got a half position. I'm going to add more. Thank God. Because I'm going to add more later. Something else on here is like aspirational. It's something it's going to go down to that level or up to that. So these are aspirational. Doesn't include ISSB on here. But on my hedges, I do have 13% YQQ, which we're just talking about. That one's doing well for me today. Probably a big part of the reason I'm not doing too poorly today, considering blocks, that I have 12% of. It's down 7%. What's 1/8 of 7? I guess 80 cents or 90 cents or something. So the blocks is costing me 90 cents of what my overall portfolio is down. Portfolio is down 1.5. Blocks is more than half of it. Blocks. I need a new hat. Come on. Where's my ball cap? I have a Sooner ball cap. And anyway. Well, then I had 10% ATTR. 6 salty, 5 cash. Maybe I'll just drop salty. Salty's a dog. Maybe I'll drop salty and put it into ATT and boost that up to 15%. Leave white triple Q at 13. And I do have 5% cash, but I don't have it. Obviously, these numbers add up to fully invested because they're, like I say, some of them are aspirational. One is coming down and one is going up. Anyway, that's kind of the current state of affairs. But yeah, I mean, hopefully you guys are doing better than me. I mean, I made a bad timing decision, and even though I cut back on my Bitcoin exposure, I did it too late and not enough, and that's what happens. But I'm fine just being down to there's the market dumping over. Yeah, of course it's. I mean, yep. Yes, sir. Yeah, until we did. This is a classic. Oh, okay. So this is the low for the. Yeah, that's the low for the year, and I figured we challenged the low for the year. Maybe we'll go underneath, trap, and bounce a little bit. But then when we do, and then bounce into the close. Then that'll be an opportunity to sell, just like yesterday's bounce was an opportunity. Lately, it just seems like the momentum's down, and so wait for a rally, and then try to get short a little. I'm talking on an extremely short-term basis. I never go past Friday on my. I mean, I just try to figure out what's happening between now and Friday. And I'm saying between now and Friday, it doesn't look that good. I would be, not that it couldn't be, but I'm just saying that, and then beyond that, once we get to Thursday or something, I might trying to start extrapolating what's maybe going to happen next Friday. I just try to limit my time horizon. Hey, yeah, the market is dumping. I believe you may be a new commenter, and if so, I appreciate you. M5B. Granite shares worth it to hold for the income. Well, I'm just going to say this: I can't give investing advice. I'm not a. I was a stockbroker, but it's been like 35 years, and I forgot all the stuff I learned, and so don't listen to me. And and even when I was a stockbroker, I mean, it wasn't like I was the wolf of Wall Street. However, I'm just saying this: to me, the Granite shares and the Yield Max. And there's probably some other ones. I'll throw Round Hill in there too. The ones that pay the high yield are the super risky ones. So especially in a pullback, because I mean, I'm trying to myself. I've been trying to kind of. I have a bearish outlook. So in a bearish outlook, I would not like Granite shares or Yield Max as much, and that's why I used to have 28% Alti. And I started cutting it September 28th. I just looked. I cut some more at the end of October, and I'm down to like 9% or whatever. But and it's because I'm trying to de-riskify. I've ever since last fall, and I've been wrong so far. I thought the market was too high and going to dump. So I mean, but talk to your planner. I can't tell you. I'd have to know what other stuff you have, how much money you have, your goals. Here's a just general advice. But if it's a small position, if it's less than 1% of your if you have $1 million portfolio and you have $5,000 worth of Granite shares, whatever. I mean, yeah, maybe. But I wouldn't have a $500,000 portfolio and $100,000 worth of Granite shares or Yield Max right now. That's just my opinion. Mayor, you bought the dip today as well. Haha. App 11 with the drag. Yeah, today's making me mad. You meant YouTube. It should notify. Yeah, it should notify you. It has been slacking lately. But I'll always, and I knew what you meant, Marcus. I was just saying that maybe I'll try to post in Discord and it'll get people back up, because you aren't the only one to say that. I hear that at least once a week. Depends on your strategy. I've seen people make it work, but if you want something simple, then Marcus is giving advice on Granite shares. Granite shares equals NAV erosion. Well, I'm going to say, you know me, I'm kind of I like to be very fair. It's not Granite shares' fault. It's the 100% distribution. The distribution equals NAV erosion. I mean, but anyway, but it is Granite shares that pays the distribution. So yes, absolutely. I think in a raging bull market though, the Granite shares ones. I mean, I did fine in Granite shares, but I sold I sold last September when I sold Alti. So anyway, it depends on yeah. Then, that's what I was trying to break it down to money. If it's just a flyer, and you have $5,000 worth, you aren't spending the income, or you have $10,000 worth, you got $1 million in your retirement. Maybe you aren't even retired yet. You're just curious about these. Put it on drip, see how it goes. Yeah, but if you're really trying to retire off these, when you get into a bad market, I would go towards the less risky ones, J.P. Morgan and Neos. And then when you get into a bull market is when, in my opinion, when you can add a little extra risk. It depends on your outlook for the market. Okay, yeah, I agree. RJ, good advice. Neos, Amplify, Curve, Calamos. And RJ likes Yield Max for Spanish shares. I'd say I do too, honestly. I would say I do. Yield Max has some excellent funds. GPTY, Biggie. They have a few excellent funds. Granite shares, I don't know. XQQI. Yeah, that's what it was. I found it. Need more track records. So, yeah, we do. I was just going to see what's doing on a one-day basis. Yeah, and not to mention it's 1.5 versus 1.3, and the 1.5 is Neos, right? And the 1.3 is Tap Alpha. Oh, and it's 1.3 daily versus 1.5 monthly. Now, I didn't factor that in. Oh, of course, Neos isn't doing daily options, and that's part of the magic. Well, not only Neos, Global X, JP Morgan, they use those monthly options, which are super boring and don't pay that much, but risk and reward, how that goes. But yeah, I forgot about that. So they're 50% levered, but not on a daily basis. Yeah. So yeah, okay. Is there a reason for Round Hill's XDT and QDT and much lower distributions? Well, Doug, I had not looked into that yet. Is there? You mean for them? Is there a reason for them to lower distributions for round? Are you worried about your income going down if the price of the market goes down? Or I love to talk about this kind of stuff. Give me a hint. And but the general answer is funds that sell options, and this is an option selling fund. Even if yeah, these guys do. They sell ODTs. So the funds that sell options are at the mercy of the IV of the market. I think in a market pullback, Round Hill might actually pay a little bit more, like Yield Max does too. The NAV's going to be going down, so it's not like you're going to pull for a market pullback. But I actually think those you might expect a little boost in dividend if we get into a bad market. Let's check last April. Or when did XDT come? Okay, let's go to daily. But the other thing is I don't really follow Round Hill that much. Some companies, even though the IV changes, they manage the distributions really heavily. So it's not that dependent on IV because they're building a bank and they're saving some and giving some out. So it's not as dependent. Company like Yield Max, where they just pay all your stuff to you, pay all the premium they earned, those are the Yield Max ones really do seem to go up quite a bit during pullbacks. So let's see. So this one right here should be huge. I think they pay a week behind too, though. But let's see. So all right, before the market started pulling back, like when the market was still bullish, 25 cents, 17 cents, 23 cents. 22 cents. Now remember, they're paying a week behind. When the market's dropping, vol starts going up at this point last year. 20 cents, 14 cents, 22, 32. Okay. But it's a week, even though the market's going up, they're paying a week behind. So the 32 probably is catching some of that big downdraft. 21, 27. I bet this next one's giant. It's huge. Here's a record breaker. It's huge. No, 21. All right. Well, this one's going to be huge. Well, 23. 34. They may even pay 2 weeks behind. Somebody's decoded how it kind of looks like they do. But it looks like they're about 2 weeks behind because that dividend right there that was paid there probably reflected on this volatility right here. The other 30-cent dividend they had was right here, but it's probably reflected on that volatility. So that's a long way of saying I don't know. But there's you know, the main reason or excuse the fund managers will give you for the thing going down is if volatility gets crushed, and that's more a problem if the market keeps going up. So forget granite decline boost and erosion max all downhill. RJ won't touch granite. I played with some yield. Rex is a good one. We gotta talk about Rex all day. I played with some yield max Rex round hill from time to time. Heck yeah. Tiger rotated to lower weekly paying yields like 28 to 30, maxing to 40, because anything more, the funds will eat itself in. Yeah, over a long enough time period. Correct. They'll eat themselves over a long enough time period. Over a short period of time, some of those funds might do great, you know, but yeah, over a long enough time period. Also, basket funds that hold real securities better. Absolutely, Tiger. I actually like the basket ones. I'm fine if real or synthetic, doesn't matter to me, but I agree with everything else you say. 150%. Rapid trade in and out for dividend payouts. Yeah. You play XDD, QDT, and RDT at year end only to try to catch that. Did they have a year end distribution this year? I guess I should know that, shouldn't I? But let's go look. Gosh darn it. So, yep, there you go. $2. Well, that's a nice one. $1.38, 20. So they had two big ones at the end of the year. Heck yeah. Yeah, those are good ones. Those are good ones. Yeah, income is going down from those payers. Okay, sorry to hear that. Like I said, it was a long way of saying I really don't follow those guys too much. That's the most I've looked at them in forever. We got some fat dividends at the end of the year, though. All right. Have XDT and QD somehow changed your strategy in lower path? That's a good question, Doug, and I have no idea. I can maybe look into it. I mean, I haven't seen any other influencers make content to that extent. Marcus lots of times will send me prospectuses and people will put them in the Discord. I haven't seen a Discord or anything. It looks like we have an interview with, I have another interview set up. Hang on, let me check my email real quick. Who this is? Okay. Well, we don't know a time yet, but anyway, I've got a response on one of the companies I was talking to. Okay. Okay, well, Marcus knows. Marcus says they haven't changed their strategy. They were just always susceptible to NAV erosion. They don't capture much upside. Well, they sell covered calls daily basis, but they do actually. There's a caveat to that. They catch. They're the XDT and QDT were the people that invented the doing daily covered calls and not selling it at night. Right? That was them. That wasn't Tap Alpha, or was it Tap Alpha? I swear to God, it was them that did it first. It may have been Tap Out. No, it was them, because we couldn't. When they first came out, I couldn't figure out why they were just spanking spanking triple QI and the Defiance funds I was looking at that paid about the same yield and did the same ODT or did a similar strategy. Well, it was because they aren't capped at night, if I remember correctly, and that's the whole reason Jay came out. Well, Round Hill changed the whole industry. They brought out QDT, XDT, made them weekly. And Jay had to come out and switch all his stuff to weekly. And then Jay came out and they kept Defiance's funds the same, triple QI, and well, they changed those a little bit, but they came out with a fund. Jay came out with a fund that uses the Round Hill strategy that does ODT options. It's a yield max fund. It's called STTY, RDTY, QDTY. Does the same strategy. It's uncapped at night. So it's not. Sometimes I say that's only Tap Alpha and Matthew Tuttle that do that, but actually, now that I think about it, it was actually those guys were actually the ones that brought Round Hill. Actually innovated that into the industry, and they also innovated the weeklies. I don't think anyone was doing weeklies before Round Hill. Then once Round Hill started doing weeklies, yield max started losing AUM, and XDT, QDT, and RDT were outperforming the Defiance similar funds. Yeah. Yeah, they did have outsized payouts. Doug is saying he thinks Round Hill are 2 weeks behind. Yeah, 2 weeks. That makes sense with the way we looked at it. Yeah. No, then they must not be. Well, the winning on what they ride. Yeah, that's kind of a complicated topic. They don't, when they lose on what they write, that comes out of your NAV. Now, but yes, they can also lower the yield to make. Yeah, I mean it's a combo. It's a combo platter. I follow you, Doug. No, it's T-Spy Max. Okay. T-Spy is designed to capture more dealers where XTT uses a synthetic. Yeah, I think synthetics. I'm fine with synthetics. That's all I was trying to say. Use a synthetic strategy that often result in higher immediate yields. I don't agree with that. I never have. Anyway, T-Spy is designed to capture more of the index's growth by holding actuals. Yeah, I've never agreed with that. But I mean, everyone thinks that. So Tap Alpha, Neos, and Amplify, iDevo, Devo, QDevo, only good ones right now. Those are some good ones. iDevo, Devo, I mean, but they only pay 5 or 6%. But they're, yeah, QDevo, I'm not knocking them, but yes, those are some great ones. Those are some great ones. So, so the reason that T-Spy, in my opinion, it doesn't have to do with the synthetics because it's because of the way math works. The reason T-Spy holds its NAV better, in my opinion, because you're right, Marcus. T-Spy, well, or because I'm right too. T-Spy is designed to capture more upside. Absolutely, I agree with that. And of course, we talked with Tuttle, and we've also talked with Psychotora from Tap Alpha. They say the way they designed it to catch more upside, I believe, was not being covered at night. You know, so it definitely catches more upside. Not to mention T-Spy pays 14%, and XDTE that uses the synthetic strategy pays 30%. So we would. So I'm just saying, if they both paid the same, I've just never seen any evidence of that. A lot of people, I think that. Now, it's usually not smart people like Marcus, so it worries me. Or it's not somebody that knows every bit as much as I do. So now it's worrying me that Marcus is right. Or I'll look into it, but I think that's a misnomer. I think that's a misnomer. It's just my opinion. Okay, but I'm not trying to slam it out. Okay, but let's look. Okay, so let's just compare the two of them. So yeah, T-Spy definitely cut more upside, but okay, so look, one started at 49, one started at 25. So we can double T-Spy's dividend to equalize the comparison. So that it's twice. XDT pays twice the dividend. So there's $7 extra missing from XDT's price. $7 extra that that should be there. Because this is, yeah. So they've, in other words, they paid a $15 dividend. If they would have paid the dividend that T-Spy would have paid, it would have been 7.5, and the performance would have been the same. It's, I promise that the synthetics don't make a difference, in my opinion. All right. Tap Alpha Neo. Yeah, I agree with that. I like a lot of those funds. I also don't think you can break it down into family because there's some funds there's some funds from families that people don't like that are beating everything else, and then there's some funds like from Neo. I saw a Neo's fund the other day that was doing terrible. I forget what it was, but I kept comparing it to stuff and it was getting spanked. So you know, it's not, you know, there's no guarantees in life. All right, guys, I'm gonna let you guys get out of here. We've been doing this long enough. I surely appreciate you guys. Just making sure I didn't miss any last minute comments. Okay, so you guys are gonna like this. I'm making an Option Bro video, so hopefully you guys will like the Option Bro video. Go read Matthew's newsletter, and you don't have to watch my video because I'm just kind of taking his newsletter and showing it to people what he's talking about. Nvidia's taking. What about AMD? AMD's crashing the freaking. Well, it looks like it. All right, let's look here. I mean, yeah, Nvidia probably not also. And then wonder if the companies that have earnings tonight miss earnings. And then tomorrow we have Black Thursday or whatever. Yeah, I mean, Nvidia is not helping for sure because it's the biggest position in the S&P 500. It's down 3%. Yeah. I'm with you. AMD being down 16, even though it's a smaller position, I think also probably hurts. Yeah. Okay, so what are you saying, Art? You're saying it was your, or DJ's saying it was his largest holding in one account, IDEVO. Well, that's a good one. I mean, it's just IDEVO. But like I say, if somebody said IDEVO is designed to catch more upside because they use real stock instead of synthetics, I would push back on it. And I would say IDEVO catches more upside because they only pay a 5% yield. You know, so I mean that's the yield's the biggest impediment on it. The difference, the reason some funds use synthetics, the math's the same. You buy a call, sell a put, the math's the same. The reason some do it that there are from operational standpoints. Well, hey, it's easier to roll out a synthetic, and if we do that, we can take the profit and the profitable leg, and then we can write off and then that's where the rock comes from. Then they can take the unprofitable leg of the synthetic, show that as rock. You don't have taxes. So sometimes there's a reason, an operational reason why a synthetic might even be better, or some people might actually want stock. Some funds actually part of their plan is to capture the dividend from the stocks. Well, you don't do that through synthetics. So, I mean, there's operational reasons. If you have a fund that's trying to sell premium and capture dividends at the same time, and there's some that do that, absolutely, those guys want the actual stock to capture the dividend. But there's operational reasons. But as far as the dollars and cents and risk and reward, I don't think it makes a big difference. All right, nothing specific is happening. Marcus went and checked out the market, the whole market. It's AMD being off 16%. People bailing out of chip stocks. David Hall, thank you for being here. David, it is a tough market. I hate to see this. Oh, and the new Claude tool is doing this. Oh my gosh! So that is it Claudebot? Is it this tool? Oh, I didn't mean to do that. There's a keystroke thing where you can. Oh, that's cool. Oh, that's cool. I didn't know you could even do that. Huh. All right. Can you guys still hear me? Yeah, you can. I should just do it this way. You guys don't have to see me. When we start looking at charts, well, I did it this way once and you couldn't hear me. I cut off the mic too or something. That's the way I should do it every time. All right. That way it doesn't matter if I have on my blocks hat or not. No one cares. I mean, all right. The Dow equal weight diversified is up. It was released and all in-house. It was released and for all in-house lawyer work. SCOTUS ruling coming out on tariffs. Yeah. I do need to play with the keyboard more. As you guys know, I went 2 years and never even had a computer. I mean, a laptop's a different tool than a desktop. I'm having a hard time getting used to all these tools, multiple monitors. I have 3 screens. Really have 4 screens. I have an Apple Cinema monitor, but I need a. Does anyone have an adapter for I need to get an adapter for a FireWire, or not FireWire, Lightning port. A Lightning port 2.3. It's a Lightning port 2 to Lightning port 3/4 adapter. Anyway, I have Lightning port 4 ports on my Mac Mini, and I have Lightning port 2, but this is a beast. It's a 27-inch monitor. Once I get this going, I'm going to have 4 screens, 2 in front of me, 1 beside me, and then on the other side, I'm going to have my my laptop. I just figured you're talking about Claudebot. I've been hearing great stuff about Claudebot. Yeah, but it is a tough week. All right, let's check the markets one time before we go. I mean, it does look like AMD has a little rejection tail on it. Come on, AMD. I mean, anyway, let's look at the market. I mean, SPY has a rejection tail. I mean, it's bouncing. Let's get into Thursday. We bounced here. It made a new low for the day, trapped some people and bounced. I mean, see, we're probably getting ready to go make another new low. You watch, I mean, reversion to mean. I said it earlier this morning. I said we're probably fixing to go here at some point. Just 680.75 is what I said this morning. So at some point, that's probably, I guess it's, I mean, it could stop and turn around here. We'll see. We shall see. IBIT, let's check out IBIT. Now, this is what's hurting me. Anyway. Okay, I can get a port hub. Okay, well, I have a port hub, but it has. I need to get a new one of those too. Yeah, but yeah, good call, RJ. I guess I could get a port hub maybe that just had a. Yeah, I mean, I have a port hub. It has HDMI, two USBs. It doesn't have, because FireWire is not a thing anymore. Apple doesn't support that, but they do support USB. Or FireWire is just the transfer mechanism, right? The transfer protocol. All right, Marcus. ICAP, NIHI, and EDO. Yeah, we looked at EDOG last night, and it went right to my to-do list. Right to my to-do, which I guess doesn't mean anything. That means we're never going to see it again. So, but that's, we talked about it on last night's show. Go watch last night's show. I really will make some content on this. This is interesting as heck. What they do is it looks like they allocate to all the State Street funds. So they have all the sectors, but they vary. I bet they vary the amounts that they're in various sectors based on their estimation of the, coming year in the market or whatever. But yeah, those are good ones. Then we have NIHI. That one's called, is this the one that I checked that wasn't? No, that one's done well. I totally forgot about this one. So this is foreign stocks, right? I mean, foreign stocks, silver, and Ethereum are supposed to be hot this coming year. That's what I've been hearing. So yeah, NIHI is very similar. Oh, IDV, yeah, international. That's what international. NAV is better than NIHI, and you're getting when it hits 50 again. So, IDVO's NAV is better than NIHI. Well, you know why that is? I can tell you why that is. I know it. I can tell you right now why that is. You guys know too. Yeah, gold and silver being slaughtered. NIHI is completely foreign, no US. Okay, that's good to know. Really, for my model portfolio, I guess I need to get some. I'm just out of space. I mean, I've been thinking maybe selling gold and just keeping silver, because I could sell gold for a profit, and then I can make room for some international stocks. I was thinking Fiat, or I was thinking GX, GIAX. I mean, that's what I was thinking. Maybe you know how my thinking goes. Sometimes it's wrong, but I was going to ask Marcus about it and ask the chat about it. Yeah, good looking fund there. Now, yeah, IDEVO does a lot better on that for a couple of reasons, but the main one is the dividend of GX compared to IDEVO, because GX is approximately half the price, but the dividend's twice as much. The dividend is about 3.5 to 4 times as much in GX as is IDEVO. So now I'm not saying, maybe even if you added that back in, maybe IDEVO is still better than GX. I'm not making, I'm saying, but it's something to be aware of. I mean, let's see, 20%. GX is, what is that, 22%, something like that. IDEVO is what, 5%. We've already said, yeah, it's four times as much. So in dollars and cents terms, like I say, you can equalize it. You can equalize for the dividend, and you can look at these numbers, and you can see what it would be if it paid the other one's dividend. It'd be a lot closer. I know I hate to hear about KYLD, but KYLD is probably taking a dump because, like Eric the Aviator says, gold and silver are down again. All right, guys, I'm going to get out of here this time, barring any last minute questions or anything I forgot to talk about. Anyway, okay, I'm going to go do my Option Bro video. What time is it? I'll try to have it out by noon, because really everything's, sorry, I do that all the time. Oh my gosh. All right, I'm going to try to have it done by noon. I will try to have it done by noon. All I have to do is go record it. I will talk to you guys soon. Remember, not financial advice, consult a professional financial planner. If you'd like to support the station, you may do so at paypal.me/maxconvexity. And I always appreciate donations. Outside of that, you guys have a great day. Barring any last minute questions I see down here or comments. Yes, it's true that GX ID will probably grab when it comes back down. Yeah. All right. And DJ sold all his KU, everything is tanky down market. I hear you. I hear you. I wish I would have too. Anyway. All right. I'll talk to you guys later.